just minutes ago. The White House economic advisor, trade hawk Peter Navarro, he says a trade pact with China in 90 days looks difficult. That according to the Nikkei. Now, keep in mind the deadline is March 1st. As the clock started ticking on all of this at the G20 dinner, Navarro says the only way a deal will happen is if Beijing is prepared for a full overhaul of their trade and their industrial practices. We have Raymond James Washington policy analyst Ed Mills joining us. You know how to connect all the dots here. You know, we're staring down China. But this issue is about more than trade. The tentacles of this story is the espionage, the hacking. Who's in a better position now? Who blinks first, us or Beijing?
I don't know if anyone blinks first, and that's one of the big problems here. China describes this as the 40-40-20 problem, that there's about 40% of this that we can deal with today, 5 years from now, another 40%, and then there's 20% of this here that is totally off the table to China. Guess which part Trump wants to talk about? It's that 20%, and that is what Peter Navarro is talking about when he talks about China changing their industrial policy. That's a non-starter, and if that's a non-starter, then there won't be a deal in March. And we get more tariffs. We get more restrictions on intellectual property. This fight could go on for a very long time now.
Do you think if we get the encouraging words that both sides are talking, that the markets are able to at least stabilize in the new year? And I'm bringing that up because a lot of times at the end of the year, you do see a Santa Claus rally. We'll hold out hope for next week and the first 2 days of January, but a lot of the traders, a lot of the investors are done. They are done for the year. They're not buying anything. So is there hope when things hopefully return to normal in 2019 that just talking between both sides will help the market a bit?
Yeah, so what I've talked to clients about all month long is the first trading day of December was the day after we got the news from the G20, and that was unabashedly positive. And it has faded fast, and we've had this sell-off. And most clients at this point, end of December, are trying to save their jobs. They don't want to buy anything. They don't want to take any risk. Yeah. But when I talk to them about the future, the fundamentals of the economy are still extremely strong. People are optimistic about the future, and if we get any resolution whatsoever on China, they believe that's the next leg up. Yep. Look for Steven Mnuchin, who always gives us good trade headlines, to talk very positively about how things are going. The key here, though, ultimately is Lighthizer. If he thinks there's progress, that's when I get excited.
Ed, do you remember how we started the year? Tax cuts, deregulation, everything was great. We were saying, can this bull market ever end? And look how we're ending the year. And you just brought up the fundamentals of the market, 3.4% final third quarter GDP, wages going up, people are feeling richer, we're buying stuff for Christmas, there's going to be a lot of presents under the Christmas tree. Yet you have all these other issues. You've got Great Britain trying to leave the European Union, maybe no deal in sight. We've spoken about China. What's going on Capitol Hill? Our U-turn, pulling our troops from Syria and looking to pull most of them from Afghanistan. How does that affect things?
D.C. policy risk was a total tailwind from the election day of Trump up until the last couple of months. And what we've always ranked is kind of what's positive, what's negative. On the negative in the kind of D.C. policy arena is trade uncertainty. It is tariff uncertainty. It's investigations such as the Mueller investigation, personnel uncertainty. So all of the things that are potential overhangs, that's what is the focus in D.C. Earlier, it was tax cuts, fiscal policy, deregulation. That's why the market was so high at the beginning of the market, but Trump has changed his tune and is focused almost exclusively on the negative side of the ledger, and that is what's propelling the sell-off here.
But he seems to always change his tune, so sometimes it's difficult to know how to react. We're flashing the Russell 2000. These are the small companies. They are in a bear market. They're relatively immune to trade issues with China. The Dow Transports are in a bear market. The NASDAQ down 3% today. It's in a bear market. China, Hong Kong, Germany, Europe's #1 economy, in bear markets. So you look at the global arena. What do you do in 2019?
But I think you kind of stay defensive. I think that you look to kind of hope that the things that are benefited by strong GDP growth by the consumer, where you can kind of tick your toes back in there. However, I think the undertold story on the trade fight is how we have said anything in our technological space is now a national security asset, and we're putting restrictions on investments, restrictions on exports, and so it is no surprise to me that tech has taken a hit when we're going to regulate it, because ultimately there's a lot of investors out there that tell me, Ed, tell me what you're talking about, because I want to stay away from that, because that has too much risk that I can't understand, and so, or don't want to figure out, and that's what's going on here.